All right, ladies and gentlemen, boys and girls, welcome back to another episode of the Financial Life Military Monday segment, brought to you by me and me only, because I'm awesome. That's such an arrogant thing to say. Aaron's like, I don't want to listen to this anymore.
But don't you gotta you love it as a podcast host? Podcast host. What
Yeah,
can they say?
what else can
Well,
I say? It's me, me only. Like no one else worth what you do. You know what I mean? So, excuse me. Before we end today and introducing my guest, some of you may know, some of you not know, I do some things other than podcasting, like financial literacy, online coaching. I'm launching a 5-day mini course this coming November 4th. How to create a life love in 5 steps or less. I'm sorry, no, in 5 steps. It could be less if you really go hard at it. But also help you with credit. And if you'd like to learn more about any of those things, go to speakwithmatt.info. Again, speakwithmatt.info. No need to put in the triple W. Will work. That'll take you right to my calendar. Book a call that way, and we'll talk more. And this episode is also sponsored by Born to Risk. I'm one of the co-authors of the book. One of like 40 co-authors. That's also started by a veteran. He's also another Marine. So any copy of the book you purchase through me goes to help other veteran organizations. So it's a good thing. Well, that being said, today was going to be a good conversation episode with the guy named Mike. I'm trying to say his last name, Butcher Castaneda, something like that, who's a financial strategist. Now, you're going to correct me on this, Mike. So we talked about this before. Well, you do help people with life insurance, but you also do some other like higher level sneaky stuff where it's like I forget what you said. It's like you can do it where it's like you own nothing but control everything through like a something. We'll talk more about that. I forget where I was like,
yeah,
yeah. But
no,
hey,
for
man,
sure.
yeah, thanks for being on today. I appreciate you.
No, I appreciate you, and I appreciate you allow me this opportunity to come on and
I
speak with
got
you.
to. I got you, man. God, my fellow veterans. So now the important question that I will ask you is, what branch did you serve in?
I served in the Air Force.
Oh my God, the chair force. Come on, bro. God
Hey,
damn.
so
Why the
here was
Air
the thing.
Force? Yeah. Tell me your excuse.
So my cousin was 82nd Airborne, and
Mhm.
he was somebody I looked up to. So he was like, "You're not joining the Army because I don't want you to do what I did.
Yeah.
You're not going to be a Marine because we're just going to fight." So I was like, Air Force or Navy. I was like, you know what? I don't want to be stuck on a boat for 6 months, so let's go Air Force.
Yeah, because I didn't have that experience, but yeah, you've been on a boat for 6 months. You can't go anywhere.
No, in hindsight, I wish I would have just gone to the Marines,
Mhm.
regardless, because of the camaraderie that you guys have after service,
Yeah.
right? Like, I don't think any of the other branches do it like you guys do outside of the military, which is phenomenal
Which I
because we
wouldn't
need that
really
brotherhood.
know. Yeah, I wouldn't really know because I've been in it, so you would see. But now you know.
Yeah,
Now you have a life of regret. I wish I had joined the Marines. Don't do it, son. Your deathbed with your millions of dollars made through life insurance. Don't do it. Oh my God.
yeah, right.
Did he just? Yep. All right. Well, now I know. Cool. So you did the Air Force. How long did you serve for?
Did 10 and a half years active
Okay.
duty and then about a year and a half in the reserves.
You're like, I'm tired of this shit. I'm quitting.
It, that was exactly what it was.
You're like, I don't do shit anymore. Life seems a lot easier. I can say stuff. I can if I have an issue,
I
I
could
can go to
grow this luscious beard.
yeah, I can go to this beer. I'll just shave it off every other time it comes along. I can be like, fuck this, I'm done. I understand. That's
Yeah.
uh God. I got you. Okay. So after you got out, what did you go right into doing what you do now, or what was that journey like?
No. So got I was in it. So I was security forces, or every other branch says MP, right? So I
Right.
got out. I didn't want to do that on the outside though, especially with how the world was turning.
Yeah.
So I was like, what am I going to do? I thankfully sat down with my realtor at the time, and she was like, get into real estate. You like talking to people. I think you'll do very well. So first thing I did was go to real estate while attending school full time using the GI Bill, and then eventually voc rehab as well to get my master's.
Mhm.
Um, but I ended up getting an MBA in finance And after leaving real estate, because I really hated showing homes and spending my weekends doing that. So
right.
I thankfully my business was 100% VA. It was all military, so I enjoyed that aspect of it and teaching military members what they can and can't do with their VA loan, the different house hacking rules that you can do,
Yeah.
just to build a portfolio while you're active. But outside of that, I was like, I'm done. Like I love the consulting. I just didn't like stroke home. So went into different beverage sales, solar sales, door knocking, like doing all that. And I got in contact with a skill bridge program. And the guy was talking to me. He's like, "Have you thought about finance?" And I was like, "Well, I am in that space already." And he was like, "Well, do you have a license?" I was like, "Yes." I was like, "I have my MBA in finance." He's like, "Well, come talk to us." And thankfully found this company that does more financial literacy, just like you do,
Yeah.
to educate people because there's so much out there that they don't know about.
Yep.
Because, and as you know, there's only less than 8% of schools in America that offer any kind of financial education to graduate high school.
Yeah, and let's highlight the keyword any, not specific, any.
Yeah. And
Any.
then we're sending these kids off to go to school and they're going into thousands of dollars, hundreds of thousands of dollars in a debt. And then they don't have no means to pay it back because they're getting jobs that aren't even going to make
Money.
So I've sat down recently with somebody. They had over $350,000 worth of debt with no mortgage.
That is their mortgage.
They had over 200 and something $1,000 in student loan debt.
Holy cow.
Making $46,000 a year. When are they paying that off?
Never. What did they even go to school? I'm not even gonna ask. Don't even tell me. That's so financially backwards. And this is where financially comes in because it's not taught. We're taught go to school, you get good grades, and you'll get a job to pay us off. But no one. But depending on what you go to school for, how long you have all this debt. No one says you don't want to start in the negative for something that essentially is just a piece of paper. Since I graduated from this thing. But what skills, like you're going to debt to pay for skills that you could, it just, when you really think about it, it makes no sense logically and financially. And then people find out the hard way, I shouldn't have done that. It's like, but there's ways that they can still pay it off quickly. I know you talk about that. You help them be like, here's light in the tunnel. You stick to this, you're good.
Right. Yeah. We build different debt snowballing consolidation plans, or debt avalanching. Primarily, we've taught consolidation, and now I know that's not always the best.
Yeah. It's like, don't do. Here's the difference.
I saw your face,
and
I was like, hold
your
on.
credit. And let me pause.
Yeah,
people, debt settlement and debt consolidation are not the same thing. Debt consolidation, okay, in this sense, is you have some credit card debt, or maybe somewhere out there it takes the debt you have, pays it off, and you still the account's open with your original creditor, and you pay off the company a non-installment loan. Debt settlement tells you to pay them 800, 600, 500 a month every 2 weeks, whatever. Meanwhile, you're paying the debts of a company, your bills aren't being paid. So you're getting marked late every month. Then debt gets charged off, and then they pay it. So your credit gets shot, your debt goes away, and you become a person that can't get gum on credit. It screws your credit up and does not help you.
Yeah.
Aren't you glad Aren't you glad you met me? Or like, oh no, this is terrible. Yeah, don't do it.
Exactly. So, and that's helped me with my clientele, just being able to explain that.
Yeah.
So we've kind of stuck to that snowball or avalanche, which is either high payment, high interest rate, whatever's going to get them out of debt faster, paying the least amount of interest is what we look at for our clients. So yeah, we build those plans, and this hurt me when I saw that though. Like over 200 and something $1,000 is student loan debt and only making 46,000 a year. Like, if you have to go to college, it should be for a skill set, like a doctor, engineer type stuff, like things that you actually need that degree for. But if for me, my MBA in finance, thankfully the military paid for it all, right? Like I have no student debt.
Yeah, you would have been who knows how much.
And I'm not even technically really using my degree because I had to go get a license, which I could have done this out of high school.
But no one tells you that. No one tells you this shit. It's crazy. If someone had come to me and was like, yo, I mean, I'm different now than I was when I was 18, but it's like if someone said you get life insurance, I've been like, how did I do that? We'll get a license, da 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 da. And I've been like, really? Okay. I've probably been more open to it. And then you know what's bullshit though? Had you and I told us, and here's the thing. We would then go to our parents. Parents say, well, you don't want to do that because that's not stable, blah, blah, blah. No, 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 no. They would talk your ass out and you'd go, okay, dream crushed.
Well, here's the thing. I was going to go to school to be a massage therapist. So going to a trade school for that, but my dad wouldn't co-sign a loan for me for, it was like $5,000.
Wow.
So I went down the wrong path, started getting in trouble, and I was like, well, I got to leave for the military or else I'm going to end up in jail or dead. So
between a rock and a hard place, I guess I'll choose this.
yeah. And thankfully I did, because now I have a degree that I can, if I needed to, fall back on, and the skill set with the military to fall back on and police work if I needed to. But I have no debt because of that.
Yep. You're right on that. You don't have any debt. And you fortunately have it. And I almost went down that route myself back in college because I was looking. That's what I got in the Marine Corps. Is I needed help paying for college and all that stuff. And I won't go there, but yeah, at least you're one of the few that can say I had the military pay for it. I'm good, you know. But it's part of your experience. Because you probably took now your MBA in finance in combining what you're doing right now, so you can say this is how the game works. Where do you want
Right.
to go? Here's how we can make that go by faster. So let me ask you this: if you're able to tell us, for the client you had that's got like 300K in debt, were you able to say you can pay this off in this time versus never?
Yeah. So we looked at, as far as like credit cards and the personal loans, we started paying that off because with all the student loan forgiveness, it's kind of one of those things that you just keep in your back pocket in hopes that they're going to be like, okay, it's gone. So
We
like,
don't count
let's
on
not
it.
worry about that.
Yeah.
And then you and I actually had a conversation in the midst of me helping this client to where there was like charge offs on credit cards and stuff. We talked about not what it's like to pay them off, not pay them off, right? So I was like, let's focus on the ones that are active, get those taken care of, get all that interest rate because you're still collecting interest rate. All these charge offs we'll deal with later. So we were able to get, I wish I had my computer up, but out of I think like 12 cards, there's probably about 8 of them that are paid off.
Nice.
Just building a plan and putting things in place and looking at, yeah.
Dude, that's awesome because when people understand when you're in that much debt and you start getting progress to 8 out of 12, you feel like the momentum goes. You're like, I'm unstoppable. Let's go. You're like, yes. And then you trick yourself because then you're like, I'm paying this down. You get excited to pay it off and you want to do more of it. It's like the dopamine switch is
right.
like, oh, I'm paying this off.
Well, everybody loves to win.
Yeah.
Right? Everybody loves to win. So you set these plans in place so people can start seeing those little wins. And it just, like you said, that dopamine just takes over and win after win after win, and paying all this debt off to where you have more money back in your pocket to do the things that you enjoy doing.
Yes.
People are like, I got to go spend more money on my kids or have fun and doing it these different trips, as opposed to like, oh, we're stuck in this debt. I got to pay all this off, right? So I didn't realize that they were paying it off because we have a document that we send our clients. They fill it out, and it's an active Google sheet to where we can see everything. Well, we met again, and they're like, yeah, we paid all this off. And I was like, what? I got excited. Like, I love being able to help people and see the fruit of like what you're doing. And I'm sure you could feel the same way where you're like, man, I get to put this in place, and we did it. Like, I only put the plan in place. They actually had to take the action steps. So it's like, I'm thankful that they did.
Yeah.
Because of now the things that they could set up for their family, the savings, retirement, like now there comes so much a bigger picture that they can look at.
Yep. It's like, oh my God, it's that feeling of how do I, you know what I mean? It's that feeling of, oh my God, like, ooh, it's that relief feeling.
You're out of the hole. Everybody thinks they're in a hole and they're never getting out.
Yeah, they're stuck and I don't know what to do, but like, that's when you come to you and say like, and it doesn't matter what the amount is. Like, the thing people understand, this is where my life coach side comes out. If you create that amount of debt, that means you can get out of it. You can change it.
Yeah.
You're not stuck there. It's like you didn't get there waiting and go, oh crap. It's like, no. They just have to meet with you, come with a plan, a strategic plan, and then stick to it. And then, life happens, change it up, put some here, and just keep going. And you just chunk.
Yep.
It's like, what's the saying? How do you eat an elephant? One chunk at a time.
Right.
That's it. But it's a small win. So let me ask you, so for what you do, what are some tips and things you tell people about with their debts or people listening? Like, what are some things they can do today they start getting those quick wins?
As far when debt comes into debt,
Yeah, yeah.
I would definitely. There's debt snowballing calculators, debt avalanche calculators out there everywhere, right? You don't necessarily have to sit down with us. Our services are free, so it's like we'll do it for you. If you don't have the time, we'll put it in place for you.
Right.
But if you have the time, look at those calculators. If you have debt, look at those calculators and see what you can pay off the fastest. And then obviously, if you have money sitting around your emergency funds and stuff like that, you could take from different avenues to pay off
Yeah.
this debt. And with people's 401k, the hardship loans that you can get. So you take money out of that, but you're putting away and pay off debt as well. So then you can start putting more money back into these retirement plans as well. So there's different strategies just depending on where that person's at. But first key step is if you want to do it for yourself, take a look at those calculators and then set a budget in place for yourself, knowing what you pay monthly with all your bills, and then be like, okay, we can allocate just this much more to this one card to pay it off, and then you just continue snowballing that down.
Like it. It's a small, simple steps you take,
Yeah,
Now you also deal with life insurance, right?
correct.
Okay. So how do you combine that with what you with the debt snowball and all that? How does that work to really help out someone financially in the long run? Other than paying off debt's great, but to start building some sort of wealth for themselves.
Right. And there's twofold with the insurance side because there's a tax code 7702
Okay.
that is for life insurance,
Right.
which gives you tax breaks. So you don't pay taxes on the money after the fact. And then you can grow cash in it, and then you never pay taxes on that money again either. So you get a tax-free retirement. It passes down to your loved ones tax-free as well. So there's tax implications that you can use and benefit from as well. But what we typically do, we look at their discretionary income as far as like what they have left over based on that plan. And a simple term policy is what we look at as well for clients, only because they're the cheapest. And we have ones that have living benefits as well, to where
Good.
you come down with a critical, chronic, or terminal illness while you're still alive, you can access that money so that your family's not having to worry about like bills, you're out of a job, everything else. Like we had a lady that had a rare form of breast cancer. She came down, got paid out by the life insurance company, went to Mexico because they had a procedure there that we didn't have here in the States. Beat cancer, got to keep that money that she gave, plus still had money in her life insurance policy. So when she does pass, that money is still available to her as well.
Wow.
Now her family was able to still process, get everything done, go to Mexico with her, and have that at that time with her just in case anything were to happen. But then you look at the debt side too. If you have all these debts, people think, oh, when I pass away, it's just gonna go
No,
into the bits everywhere, right?
no,
Like,
it's not how
no,
it works. These creditors don't
no,
care. They're like they want their money.
you leave that to your family, unfortunately, and a lot of people don't know that either.
Yeah.
So having a life insurance policy built to make sure that that's all taken care of as well when you do pass, so then your family's not worried about your debts, the mortgage, any of the expenses, everything. You build it big enough to where, and then at the same time, small enough to where it covers that. So then they're at least covered if anything were to happen, and they're not left in that. Their family's not left in that place and just continued, as opposed to getting in debt, like building a legacy of debt. You can help your family build a legacy and wealth through that as well.
Yeah. See, and I'm
So,
glad because I forgot people understand. See, this is the other side too, that it's a morbid topic to talk about, but it's like life insurance is there to not just help with the funeral expense and everything else. It's also the other debts they may not have. And then because the other thing too is after the process, but there's probate. Everyone goes through that. There's court because the state comes in, the state wants its money and you want things in place, and it's like the death is one thing, and life insurance helps to take care of the financial side because if that's not in place, what I tell people is that like the finances will just exacerbate the emotional everything you're going through times 1,000 minimum.
right.
Minimum. You don't want that. Like you want to just okay, it's cool. That's taken care of. We can mourn, do what we got to do, and You family fights is what it is. But hey, and you want to have will in place too. But people don't talk about this stuff, and it's just like it's
No.
all preventable, 1000%.
Well, that's the crazy part is too, is like we insure our phones, we insure our vehicles, we insure our homes, but your greatest asset is you.
Right.
Like you as a human being, especially if you have a family, and if you're a sole breadwinner, like what do you're just leaving this to your whole entire family. And then what?
Right.
Like your greatest asset is you. But we don't think about insuring our life. And it's called life insurance. To be like you want to be able to use it while you're alive, not just for the death
I'm
benefit.
sorry. Yeah, it's not for money you'll never see because it goes to your family and stuff, protection wise.
Right. Yeah.
Do you have any plans specific for veterans or those who are active duty military that you guys work with or like that? If so, what does that look like?
It they work for everybody, right?
Okay.
The insurance policy. We work with anybody and everybody. Our mission statement was corny to me when I first got with the company because it reminded me of the military where it's like no soldier left behind, right? No,
Yeah.
but our mission statement is no family left behind. And we really live by that where it's like we'll help a single mom living in Section 8 housing on food stamps all the way to wealthy America where our companies holds the 401ks for Southwest and Coca-Cola.
Wow.
So we can help anybody and everybody. Um, because it starts with the budget, the debt management, right? We build the emergency fund. We could start there and help them to where then they can build that wealth, get the proper protection, and start doing everything right that I know I didn't have as a kid. Like breaking those generational curses.
Mm-hmm.
Like it can start there financially. You
Yeah.
build a name for yourself. Um, Another thing people don't realize too is like group life insurance. When you leave, and that's what we had in the military, is the SGLI. You leave the military, you have that. You don't have that anymore,
Nope.
right? But then on top of that, one of our guys, he was downrange. He's prior military as well. One of the guys passed while they were down there and found underlying health conditions, and they didn't pay the family out because you don't actually own that policy. The
Wow.
organization or the company that you work for does.
Yeah.
So owning your own policy, and you don't have to come to me. I'm just telling you guys this, like own your own policy, please.
Yeah. People don't realize that because I remember when I was selling insurance, people say, "Oh, I got it through my job." Even when I've referred people to people like yourself that do life insurance, I've heard, "Well, I got through my job," and I explain to them, "You don't own that policy. As soon as you leave, if you get fired or should you leave, that policy is with them. You don't own it." And they go, "Oh, I don't. Nope. Own you. Get your own. Buy one that's cheap. It's okay. Then it can change. It's not a something that's set in stone. As people don't understand
Right.
that.
Yeah.
Um, what what are like the mistakes that you see people make when they come to you, whether it be in the life insurance side or like tackling on their debt and things? Like, what do you see? Like, what are like the top deadly mistakes since it's Halloween? Deadly,
Uh,
spooky, scary. I don't know.
the scary sides of finance.
Yeah, scary sides of like people don't want to like other than the opposite of like not really addressing it. That's like number one. Other than
Right.
that, like for you, what you've seen.
I would say shop it out. People stick to, and these aren't bad companies either. State Farm, Nationwide, all these big names. But the thing is with them, they can only sell you those one products. They can't shop it out. Even if they're a great company, they're a great product, but there could be something out there that's cheaper and better.
Right.
Like I've sat down with multiple people, they've had policies in place, but then they don't have living benefits. Where I saved a lady over $140. Same structure as like far as like face amount on her policy. We'll say 500,000, but this time she has living benefits for $140 cheaper because she went to one of the big names, and it's like find a broker that you trust that can actually broker it out and can search different companies for you and not just be stuck to one certain company.
Right.
I think that's the biggest thing. Like outside of not doing it,
Right.
that's the biggest thing. And then people tend to, with the debt side of it, they'll go get a 0% interest card take the one credit card and put it on there, but then they don't make the payments in the 18 months, we'll say. So then all that interest is piled back on because if you don't pay it off in those 18 months,
Right.
that 30% that's just waiting tax on for that whole 18 months. So those are the biggest things that I've seen in the year that I've actually dove into this and been doing it.
Wow. Yeah. That sticking to one thing is that makes sense. Because when I just like the one company and think they're good, they're like I'm taking care of it. I don't know why. No, I know why. Well, I can understand why. In my world of credit, people will address that first versus life insurance because the credit will stop you. Hey, you can't get this, you can't get that. It's very immediate. It's now. Life insurance, fortunately, unfortunately, you can just I'll deal with it later and later and later. The gamble
Yeah,
that you take with that is, and problem insurance, like it gives you scary stories, but happens. Like someone says, I don't need it, I'll do it later, and then boom, something happens, and then it's like you just have it
right.
in place now. And but then also people always say this too as well, like get it reviewed once a year because things change. It's not like etched in stone, it's flexible because your life changes, you know?
Right. Yeah, and we have annual reviews with our clients for that reason because we base it on we call it DIMEF. So it's your debt, your income, your mortgage, education if you have children, and then final expenses. So we put that in a calculator, calculate it out. If you want 10 years, 5 years, whatever you want to calculate it based off of, we do it that way. To where we get your insurable need, people don't realize sometimes their insurable need is more, but sometimes there's agents that will just be like, I'm just going to give you a policy to give you a policy, but it doesn't cover your insurable need.
Right.
Like I just heard a story last week about it, and I was like, hey, that sucks. Like they had $100,000 policy when they needed 600,000 or 750,000. So that 100,000 would have never covered anything.
Wow. Why do you
Yeah,
think it happens? Like people think they're insured, but then they're underinsured money.
agents are greedy, man. Like they want that money, they want that quick commission, and that's what everybody's quick to insure their phone, their vehicle, and everything else because it's not like people don't see it as scammy. It's just unfortunate that in the life insurance world there have been agents that have done that, and they're like, I don't want to go to them because of that.
Right.
It's just too scammy. They're gonna all they want is their commission. Partially, it's true. I used to work for two companies like that, where that's all they did. Man, I would get on a phone call. I would have people's bank account and social security number, or try to at least get their stuff on that first phone call.
Wow.
And sell them a policy based on just their mortgage, right? Like there's so much other factors out there.
Yeah.
Thankfully, I found a company that I'm with now to where it's not that. Like our first appointment is all education. We don't even care. You're going to get all the financial education that we have, and you're going to get it back. And then if you want to move forward to get a plan built, then we have another appointment after that. So it's like we truly want to help America succeed, like in business and in their finances and breaking all these generational curses. So much so that like our head CEO, his whole goal, he's going to start in Tennessee, is to build like low income housing where people can live there for free, but they have to meet with the financial planner. So one of us on the team every week to just make sure that they're on the right path before they can, get out on their own.
I like
Like
that.
dude, phenomenal. He's prior Air Force as well.
Boo. I like his idea, but boo anyways. You could have said anything else but that. I would have known. It's the same
Yeah,
better. All
no.
right, great. Oh,
So yeah, truly out here wanting to make sure that people are financially literate and having that information that we have. And even with my MBA in finance, I didn't get half the stuff that I'm learning now because they're just teaching you to be a leader in a business. That's all it really is,
right.
with an emphasis in finance, and you just get a little. So,
It's the
but yeah,
tough
man,
portion of
it's
life.
it's crucial.
Yeah. I was going to ask you a question. Do you see can someone ever be overinsured? Have you
Oh,
seen
for
that?
sure.
Okay.
Yeah,
And why do
there's
you think that happens? And how does someone like prevent that? Because you don't hear about that very often. What is the underinsured?
people sometimes just see like, okay, and they're like, oh, I want $1 million term policy, but why? Right? Like, why? but people will see the commission that they could get paid on it as well, and they're like, yes, here we are. Like, but why? And sometimes people just want it. They want that buffer for their family, which is fine,
Right.
completely fine. But it's got to make sense financially for them as well. And looking at their information, like their budget and everything, they're like, can we swing this? Yeah, we can add this if it costs too much, whatever the case may be. But it's sitting down with the actual client and figuring out why is it that they want that. But most of the time, yeah, they can be over insured if they don't have that need. Then why are we getting them into that policy? And there's things in place with insurance companies as well that they're looking at. I know at least on our end, we can see things where it's like they have questionnaires. It's like, why are they having this? And they're looking at their assets and everything. And they're like, they don't really need $2 million, right? So um, it just all depends on the client. But yes, we've seen that as well.
Yeah, people don't think about that. It's always I don't need insurance, and they find they're underinsured. They have no idea. Did you not do the same thing? We're in different fields in financially, but it's educating people on what they don't know and how it works
Right.
and what they need to know, so that way they can, in my end, at least maintain their score and grow it. And yours is just to keep keep in step with their goals financially and the long.
Right.
So yeah, it's education.
That's why when Alan introduced us, and I was like, sweet, like I told you I was trying to start my credit repair business at one point.
Yeah, right.
And then I was like, this isn't for me, this is a lot. But I'm thankful that we met because now I have that expertise. Like, yeah, I may not know all the credit stuff, but at least I know I have somebody I can go to and be like, Matt, I got this client. And we can hop on a call all together and then you can take care of them on that end.
Yeah.
And that's the thing, is like people want to be the expert in everything.
You can't, no.
And it's like leverage people that you trust that are the experts in their field, and then you can bring everybody to the table and be like, here's Matt, here's this person here, like CPAs, estate attorneys, tax attorneys, everything that you need, they're working for that one person, so that we can take a look at the whole picture. Like, okay, this is your part of this is your part, and we have the map set out for them. And that's where the strategy comes into play, is building that team of financial professionals where we can build that goal out for and that roadmap for that client.
Yep. That's what it comes down to. End of the day.
Yeah.
It's that having that team in place. Oh, okay. Before I forget, because we're coming towards the end. One of the last times we spoke, you talked about something else you guys do. Again, you're gonna explain it, like it's have life insurance policy, but it's like a LLC or something that's owned by something else, and you put life insurance in there, and like it's tax free or something like that. Like, explain what that is. I was like, yo, I didn't know you could do that. So what is that thing I'm thinking of? What, like, people don't know about, like, that's what these companies go. Everyone listens, whether you're live or recording. Listen to this because you want to do it.
So
go to Mike to do this. I'm dead serious. I'm going to him.
So there's two ways to do it. Like you were saying, LLC. Individually, you can do it, and as a business, you can do it.
Okay.
Where essentially you set up a trust to where the trust owns everything, and it looks like you don't own anything as an individual. You put all your life insurance, your assets, your homes, everything into this trust, and we sit down, like we have our state attorneys, the tax attorneys, the CPAs that are all going to come into this picture, and okay, this is how we're going to structure it, because you want it to be structured properly.
Right. Properly.
That's the key. Yeah. And legally, yes. But what it comes down to is when you have all that in there, and your life insurance already avoids probate. But then another tax implication that you get out of the benefit of being in the trust is you don't own that money. So the Rockefellers did this. They bought a life insurance policy on every single person in their family, but it's owned by the trust. So when they pass, all that money goes into the trust, and that's where they pull the money from. And it's all tax-free money that they could use to build businesses, to build whatever they buy, purchase a home, like everything else.
Yeah.
And it's the same thing with cash value life insurance, where you can take out loans, because who's ever paid taxes on the loan? Nobody.
Right.
You don't pay taxes on loans.
Right.
So you take a loan out on your own policy, and you essentially never have to pay it back, because it just gets deducted from your death benefit at the end of the once you pass away.
Right.
And then whatever's left over gets passed to your family or the trust. So you're having tax-free money just continuously. And you think about it from a veteran standpoint, somebody that has a disability rating is
Mm.
getting paid,
Oh,
or is going to school and gets their GI Bill money tax free.
right.
They put their money into a cash value life insurance for it to grow. They'll never pay taxes on that money. They'll
Right.
never pay taxes on it when they need it, and then it just gets passed down tax free. As opposed to if they were put into a brokerage account or a 401k, other than a Roth IRA, if you don't put it in that, you're going to pay taxes on that money eventually.
Yeah, eventually.
And
Yeah.
then yeah. And you mentioned will earlier too. Here's a big thing in California: a will really means nothing.
What?
And in most states, a court like they'll recognize it, but everything can still go to probate. Kids can still go into foster care.
Oh,
Like
jeez.
there's no guardianship in place, so that's where the trust comes into play too. You put your guardianship into place, everything like that, to where then the states can't touch it. So there's no
Mm.
kids aren't going into to foster care from that. You're not going into probate. You're not paying taxes and legal fees and everything else like that because the trust has it all set in stone,
This is
as
like the
opposed to a
financial.
will.
Yeah, this is like the financial hack of the year, of the decade. It's like, you told me that I was like, wait, what? And that's how you
Yeah,
do it. And it's a long game. You let the sucker grow and grow and grow and grow, and this is what we're gonna do, and you just repeat the cycle so it grows your wealth
one
over and over again.
the one other thing I think we talked about too was a family foundation. I think we talked about with the business where you can set up your own family foundation, like a charitable
Yeah.
entity, and you donate to that entity so that at the end of the year, all your taxes for your charitable donations are in one place, but it's going to the Dillingham Family Foundation.
Uh-huh.
And then from there is where you donate to all the other like entities, nonprofits that you support. So then it's just coming out of that. And that's how I remember reading Warren Buffett did this, where he donated from his family foundation to Bill Gates. That's how they started the Gates Foundation, and then started Apple, and then they donated to Mark Zuckerberg for him to start Facebook through their family foundations as well.
So, so basically, when you do that, you avoid taxes and you can just grow a business and you don't have to pay on that because it's a donation to a charity from one charity to another. Basically, am I understanding it correctly?
Well, yeah, because you're going from one nonprofit to another nonprofit.
Oh my God. And then you just do that, do that, do that. Wow. And then you can
So
use life
the
insurance.
rich, yeah, the rich know how to play the game. The wealthy know how to play this game, and
Wow.
this is the education that we're trying to bring to everybody, so that we can all start playing that game.
Right.
And
Wow.
there's so much more. Like looking at everybody was like, I don't want to get into politics, but everyone was upset that Trump didn't pay taxes. But there's a lot of wealthy Americans that don't pay taxes
He's
because the
one of
tax.
he's one of many like well again, there's a lot of people who are wealthy, whether you politicians or not, that don't pay a lot in taxes and
Yeah.
this is how the game is played. And it's like it's just there's a way to do it.
And here's a simple hack for everybody that may be a W-2 employee, because as a W-2 employee, you don't get tax write-offs
Nope.
outside of like child tax credit, your
Student
interest rate
loan
on your
and
home.
yeah, student loan interest. That's it, pretty much.
So if you go get a 1099 job doing something, that means you own your own business. Now you have more write-offs because of your business that you own.
Right.
So just go get a side hustle, doing a 1099, something, and actually do it to the best of your ability with your full-time job. But then that gives you more tax write-offs, and you get to play the same game. Because as a
Mm,
W-2, the tax code is written for business
business
owners.
and investors and investing. That's what it's for.
Yeah,
Because taking the
like
risk, you're also provide more for the economy, opportunities and things like that. So it's like, all right, tax you less. But for you guys,
yeah,
it's more. And we're not taught that. And I was like, oh, I'm like the tax code. Robert Kiyosaki asked this question. I was like, when I first heard, I was like, what? He's like, who's the tax code written for? And I was like, I don't know, wealthy. He goes, everyone. And he broke it down. I was like, because everyone can do this. Well, again, it's not
yeah,
taught. It's like hidden like to be evil. Oh my God, they pay less. I'm like, learn the game. Financial literacy.
yeah. Jeff
It's
Bezos is big on it. you know that he doesn't pay any taxes either. But
Jeez.
he's got a different strategy where he owns a company offshore that gives all the proprietary business to Amazon, so that whatever revenue he makes every year, he has to pay back to that offshore company.
And then write it off for taxes.
Well, no, because then it shows that he doesn't make whatever his revenue is for the
Uh-huh.
year. That's his revenue. Is what he owes to that company ends up being that revenue.
Oh, so it's like a loan
So then
to himself. So he's like, no, it's a loan. So
he made zero money that year because his revenue is wiped clean because he has to pay that money back to a company that he actually owns offshore as well, and then doesn't pay taxes on Amazon.
that makes sense, because if another company loans you money, you'll pay tax on it because you're paying back someone else. There's interest, so it's a whatever. It's
But it's not even a
loan,
because
right?
they're giving him equipment and proprietary business stuff. But then he says, okay, if I made 100,000, I know it's not that they make every year, but let's say $100,000 in revenue. Well, then now that's the bill apparently for the company that he owes is $100,000. So it looks like he doesn't make it because he only paid taxes on revenue.
Wow.
So
This is like the cool stuff people want to do, but you got to start small. Again,
right,
let's bring it back. Know where you're at. Look at your debt. Start small. Start paying, snowballing, whatever. Then look at life insurance, and then break it down first. And then you're gonna be like, oh,
right,
this is how to play the game. And then you'll be motivated because then it's like different. So
and go get a 1099 position or a side hustle.
yeah, that's what you
Start
do.
an LLC to start getting some more tax write-offs for yourself as well at the end of the year. Put more money back into your pocket.
All right, ladies and gentlemen, this is good stuff. Well, bro, thank you for being on. This has definitely been a great episode, and definitely a lot of knowledge has dropped, especially towards the end. So
Yeah.
people get to listen to it again, and then you should reach out to Mike. By the way, how can they reach out to you? Here's the layup.
Yeah.
Well, Matt, thanks for
Bring
asking.
it in. Yeah, thank you, Matt. First off, I appreciate you bringing me on, man. I love being able to have this conversation. I geek out. Like, I try to read more and more daily about finances just
Yeah,
because my dad came over as an immigrant. We didn't have this. He had mattress money, but he didn't do anything with it, right?
exactly.
Like, so I really want Americans to be educated on what they can do, especially military members. I'm sorry, we have a heart for it. Like, I want to see my brothers and sisters doing well outside of the military,
Yeah.
or even while they're in. Take advantage of that VA loan because there's some opportunity, and we can even discuss that if you want to meet. People want to meet and talk about that. Easiest way to contact me though is Instagram. I'm on there at _Mike.Castaneda _. Again, that's _Mike.Castaneda _. Reach out. Any questions? We can even just meet and have conversations. I'm more than willing to help clientele, just going over stuff and talking about everything. So, again, I appreciate you, brother.
Hey,
Thank
man.
you so much. I have my podcast that my wife and I host. So,
Oh, that's right. We talked about. Yeah, I forgot. We gotta discuss me being on talking about credit. They're like, we can go geek out.
Yeah,
too. Cool, man.
Yeah, man. We'll do another episode with that as well.
Sweet. Cool. All right, man. Everybody, this is it. Again, reach out to Mike. Mike, you've been awesome. Thanks for being on, man. Appreciate it.
Thank you, brother. Appreciate it.
Boo.